This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Let's take a look at one of our quotes. This is by Robert Brout. Remember that there's a part of life for which you are the explanation. Market-wise, let's take a look at it out here. You get the Dow Industrials down 235, NASDAQ off 80, S&P's off 29, gold contract up $3.30, trading at $1,222. Silver down 16 cents at $17.54 an ounce. Platinum down $5 at $1,313 an ounce. Copper flat at $3.03 a pound. Light sweet crude off 38 cents at $92.42 a barrel. Bonds. The ever-ready bond market, folks, is going topside with conviction once again. You get the 10-year up 14 ticks at 124.23. 30-year up full point at 137.25. And King Dollar up 165 ticks at 85.32. The euro is down 34 at 127. And the yen is trading down 34 at 108.70. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? Well, we're down 27 bucks. And let's see, what was it? September 25th, right? We're at September 25th, and the bottom line is that in all of 6 hours you just gave back till July 1st. Dow Industrials is not a stock that's green in the Dow Industrials. Down 237. You're inside the lower range. That sets up down to the 16,333. I expect you're going to see 16,000 out of this baby, which is another 900 points down. NASDAQ Composite. Inside the composite, what we have, same setup inside the composites. Composites going south. They're all going south with volume, by the way, folks. So composite right now, you got down 80 bucks. We're at 4474. Now, what 4474 does is get you in the lower range. The lower range being that the last swing low out here was the 4325 area. I expect, you know, we're going to build some cars to get down there. This is a high energy move, no doubt, to the downside. And there's going to be some bouncing around in here, particularly because coming into a Friday. Gold contract. What do we have with gold? Bottom line, gold tested the low out here today. Did it with lighter volume, rejected the low. Now you're up $3. Bottom line, it went into the 22nd. Did it exactly like you'd be looking for it to do. If you look at the intraday out here, it was pretty cool because what you did have is that going back on the 21st, you had come down with about 5,900 contracts. You had tested that at 0310 this morning with 3,900. And on the open, they only could get 1,900 contracts going. So you had a rejection there with lower price. King Dollar, no, bonds first, okay? We take a look at the bond market. What you have with bonds is this. The 10-year first off, you have 1.2 million contracts traded thus far. You're up 14 ticks, just about almost a half a point. The first place that's going to get any type of resistance at all is 125.21, and right now we're at 124.23, so that's a full point. The 30-year is up a full point right now. Excuse me, folks. The 30-year is doing 332,000 contracts. We're at 137.26. I suspect the first place we're going to get any flack out of that is up at that 139.11 area. Now, King Dollar. Let's go take a look at King Dollar. That no doubt has been on a tear. She had tested the highs, did it with, well, first off, she made the full expansion. Then she tested the highs and had lighter volume. So if we look at King Dollar, what you have is this. On the 17th of September, did the full expansion, 84.86. That 84.86, by the way, folks, was testing the swing point. It was 100% move or move. You had contract volumes of 66,000. You tested that on Monday, and you did the test on 18,000. Bottom line, that's not enough. Pulled back slightly, got higher, and what I expect you're going to see here, now King Dollar does want to take a break. That's in the shorter term. Longer term, King Dollar wants to go to 89. You know, we'll see whether this baby's going to crawl its way up to the price point of 121 again, which is going to be a total mind blower. Inside some of the indices, the oil and gas sector is getting absolutely smoked. And if you want to see, you got to remember, Each and every time that you are looking at downdrafts, folks, the benchmark is February 5th. February 5th is the number. ExxonMobil is getting right there right now. The February 5th swing point on ExxonMobil is 92.31 at the high and 89 at the low. Right now we're at 94.45. That baby wants to make its way down into that level. Apple, what you have with Apple, that benchmark tomorrow is going to be a big day, because what you do have is this. We had an expansion of volume with Apple today. You have 84 million shares. She had that little swing low at 96.14. Depending on what happens tomorrow morning, we might jump that creek there. But Apple's screaming number one to get down to 85. That's the first stop. On a weekly basis, however, if in fact we get this tomorrow, we haven't got it in 5 full weeks. If you get a close under this 100.72, that's going to be a failure. You know, it's a failure in volume already. Bottom line, though, it has held price. It has held price for, this would be the 3, 6, yeah, this is the 6th week. But if you lose it, loses that price, guess what? What's heads up, which is a total mind blow, and you can't bust them up. Apple's going to be in big problems. Why? Because you have a swing low out here that's hanging out here at $55, and we are at $98. That is one monster number. Some of the high volume stocks, and today we do have a volume market on the way down. This is what you have. Apple's the leader out here. In fact, let's go to the NDX 100 first. So inside the NDX 100, this is what you have. Taking points out of it, bringing it down, is that you get Vipul Communication. That's down 30 cents. Big deal. The biotech, though, BBIB, that Biogen is down 12 bucks. That's the big number. Apple's down to 347, and you have NXP Semiconductor down 242. If we go back to Biogen for a second, we take a look at Biogen. Biogen couldn't handle the highs, still in a consolidation. That's how that's set up. The largest weighting structure inside the there she is. The largest weighting structure inside the biotechs, Gilead. And what Gilead did out here today, tested its high. We get to 110.59. The high was 110.64. And you will do that. Yeah, she's good. Oh, it's going to be close. So the last high up here had 14 million. Right now we're 12.3. So she could do 14. If she does, that'll stay in a consolidation. She does less than that. Well, first off, she'll go down to 99 first, because that's the bottom of the consolidation. But, you know, we'll see how this characteristic comes in. Celgene is the second largest weighting structure inside that, and Celgene is basically giving it up, 270. Not the end of the world, though, for Celgene. The Dow stocks, these Dow stocks are getting basically toasted. You have American Express off $1.58. Boeing's down 128. You get Citigroup off 134. That's a big number for Citigroup. Oxy is down 140. You get 3M off 212. Big Blue is down 278. Let's go over to Big Blue for a second. We take a look at Big Blue. It's not that bad. Silver market. A couple of tigers want to take a look at the silver market. Let's go SIZ4. Inside the silver market, what you have is this. Okay, so come on, baby. Get up here. So silver, we get down to a price point of $17.27 today, and it rejected lower price. So silver has a long way to go, meaning it has a lot of work to do, but it did reject at the bottom out here, did it with lighter volume, so that would be saying that silver can run to 1870. What it has to do, however, is break inside of 1870 to get to higher price. But thus far, that setup is there. What has happened and what did happen inside that silver market is that baby broke out bottoms in an extraordinary way. This is Tom O'Brien. This is TFNN. Our phone number is 877-927-6648. Dow Industrials right now down 230. NASDAQ off 78. S&Ps are off 28. Gold is up 280. Silver's down 16. We're going to be right back.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow Industrials right now down 242. You get the NASDAQ off 82. S&Ps are off 30. And, you know, as I said the last couple of days, when you're at high numbers, folks, you don't need to be down too much of a percentage. But percentage-wise today, you get some action out here. The Dow's down 1.4. NASDAQ is off 1.8. The S&Ps are off 1.4. And over in Europe, the DAX was down 1.5, CAT was down 1.3, and the FTSE was down 1. So there's some selling right across the globe. Now, folks, let's go over to our man, Mr. Andy Hecht, as we do each and every Thursday at 20 past the first hour. Don't forget, right here at TFNN, We do live programming from 8 o'clock in the morning till 6 in the afternoon. You can get all of that programming right on your cell phone at tfnn.mobi. If you'd like to see Tiger TV with the audio plus the video and the charts, just go to tfnn.com, hit the TV on the right-hand side. You'll get both of them. And, of course, don't forget, Andy has an outstanding show every Tuesday, Thursday, 5 to 6, right after me. You can also test drive his newsletter, the Technomental Commodity Report, by coming over to our website at TFNN. Go to newsletters, trading newsletters. You see the Technomental Commodity Report right there. Andy Heck, what's going on?
Hiya, Tom. How are you?
I'm doing great, man. How can I not?
Good. Good. Yeah. Interesting day.
Yeah.
Interesting day. I mean, as expected, right?
There's some selling. You know, there's
a lot of selling.
There's some selling. No doubt about it.
Yeah, absolutely. So where do you want to go? Commodities. I'd like to start with gold.
Let's start with gold.
A little bit.
Yeah.
We have festival season in India, so premiums are up for physical gold in India. But I stay on the bear side. So long as we don't have a close significantly above 1247.10.
Yeah.
Which is that place we broke down from.
Okay.
I remain bearish, and I think we're going to test 1185, and I think we'll go through it. Silver is telling me that. I mean, the silver-gold ratio today is at 70 to 1. That either is saying that silver is way too cheap or gold is way too expensive here, and I believe the latter.
Yeah.
We're bombing Syria and Iraq. We took out some refineries. The commodities are not reacting the way they should, in my opinion. But we also run the risk here of de-risking, with the stocks. And I think this stock market move is real. I think you agree with me on that. I think that we're going much lower in stocks.
Yeah, no, I agree absolutely. This is what the difference is. So check this out. You just came into something that's pretty cool, because if we go back to, and what we're talking, folks, is that what Andy was just saying is that the commodity could de-risk. And that would specifically what that would be saying is that commodities going down with the market going down. But what I just realized, which is pretty cool. So in 2007, folks, okay, if you get the gold report, bottom line, we can say we're lucky. The bottom line is that we did get out before the disaster on the way down. And we got out because what was happening is that an A to B equals C to D, and was just, it was big bread, okay? But even being out, it was shocking that, gold went from 1156 to 666. And at that point, though, this is what the difference is now. Check this out. This just snapped in my mind when you just said that, Andy, right? What the difference was is that both gold and the S&Ps are at highs. And what we have now is that gold's at lows and S&Ps are at highs. So it is a different dynamic. So this is going to be pretty cool, man.
The open interest in gold is telling me, what I'm saying is the open interest in gold is telling me that the people who bought gold, earlier all got out. And there's not a lot of longs in the market, but I don't think there's a lot of shorts in the market either right now, because open interest is not kind of flashing that to me yet.
Yeah.
I want to see the market get short before I get friendly to it, and I just don't see it. I think that you might see
I'm real friendly.
some support, and those trend following systems might come in.
I'm snuggling up to that gold market, baby.
Okay. These different sides. That's what makes the market.
It is what makes the market.
As far as silver's concerned, to me, just lower lows, lower highs. And it feels like those grain markets did this summer. It's just kind of deteriorating here. I had an article out today. I'll post it in the den on Seeking Alpha about grains if you want to switch to that for a moment.
Sure, absolutely.
And I think I sent it to you. Basically, the article's called "Could Corn Go to Zero?"
Yeah, no, I saw the headline, yeah.
Of the potato market. Now, I don't know if this is a true story or a false story, but back when I started trading in '83, my boss told me this story about potatoes. He said that there was this time in the early 1900s where potatoes went to zero on the futures exchange.
Okay.
And people bought potatoes at zero. They stood for delivery. And then they went to Lake Michigan, they dumped the potatoes in the river, and they sold the burlap bags. So the moral to that story is that there's a silver lining in everything, and a good trader finds a way to make money.
And those burlap bags are expensive now, man. I know.
Burlap, burlap bags. They're worth something. They were giving them away for free, but you had to throw the potatoes out.
Hey, that's because they're made of pot, man. They were made of hemp.
Anyway, so what we're seeing in corn is unbelievable. Look, corn inventories sky high from last year. We had a really good crop last year, all right?
Yeah.
So there's still a lot of inventory around. There's still a lot sitting in silos and terminals. Now we're having another massive crop this year. So what's happening is that, you're going to start harvesting all this corn, Tom.
Right.
And, the rails, a lot of the rails that transport corn, some of the corn, particularly from the northern plains, they're transporting oil from the Balkans.
Right.
So that corn's going to fight for transportation. It's going to fight for storage space. I reckon, a decent amount of it might just sit in the fields and rot. So while it won't go to zero on the futures exchange, it might very well, for some farmers, they might not gain any economic benefit from part of their crops.
Ooh, that'd be heavy, man. That'd really be heavy.
Well, there's the small farmers in trouble here. You have to realize we're down, 50+%.
I saw that.
Corn,
I just saw that when you had me bring that up.
Wheat.
I know, man.
It's
and they don't have margins of 50%, right?
I'm sorry?
And the farmers do not have margins of 50%, right?
Oh, not at all. I mean, look, this year they could be okay. Because if they hedged, before May, the prices were still, you had $5.50 plus corn. You had soybeans at $14, $13.
Sure.
You had wheat up at $7. But now, for next year, what are they going to do? I mean, they're going to hedge down here. These prices are, bargain basement prices. Now, it's good for animal protein producers who have sky-high meat prices, and they can raise herds. But this is a true problem for the small farmer. The big guys will survive, no question.
Yeah.
But the small guys,
it's interesting.
It's going to cull the herd.
Yeah, well, what's interesting, too, is that, some of these fertilizers, it's a big problem for Mosaic, I mean...
It's a big problem for Mosaic.
Yeah.
It's a problem for Potash. It's a problem for John Deere and Company.
Yeah, yeah.
So, farming equipment, all these things, but there's a silver lining. It's good for food prices.
Oh, yeah.
Right?
Yeah.
Excellent.
Yeah.
Transportation it's great for, and the people who process these grains, there's more of them to process, so that's not bad either.
You stay right there, folks. Andy and I are coming right back. Dow Industrials right now down 248. NASDAQ is up 84. S&Ps are off 30. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full custom customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Hecht's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per a $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow Industrials right now down 237. You have NASDAQ off 81. S&Ps are off 29. That's a big number, no doubt. And, you know, this is, you know, your benchmark, folks, is that February 5th, man. And February 5th is pretty intense, folks. You know, we're at 1969. And February 5th benchmark on that S&P, I think, is at 1767, 1737. So it's amazing just looking at this chart, because it's been a one-way street. There's no doubt about it. And that's been up, you know. And so we're talking with commodities. We're talking with our man, Mr. Andy Hecht. And needless to say, the grains have got killed. Well, a lot of them have got killed. You know, oil. Let's go to the oil. I mean,
yeah, you know what? We're thinking alike. That's the chart that I just popped up there.
Yeah. You know.
So, you know, oil, again, we're down today. You know, Tom, last night we bombed, not us, the Arab coalition, bombed refineries in Syria and Iraq.
Right.
What I'm seeing in oil here is twofold. One, we see the Brent price going down relative to the WTI price.
Sure.
And all the problem is in that part of the world, okay? The part of the world that prices off that. So that's telling me there's no supply worries. We're seeing these spreads, the longer-term spreads, which we've been discussing now for weeks, narrowing. So, now you had November versus this November, the active month crude versus December 2017 was trading in June at about $17. That's trading at around $5-6 here.
Right.
A huge move towards contango. Telling me no supply worries. This is what usually forces oil up on war,
Sure.
on geopolitical events. We're not having any of that. So I reckon, just with the whole macro situation, you're going to see the price of oil eventually trade down to 85 to 87. I think that's probably pretty close to the bottom because that's where the curve flattens out, Tom. That's the price of oil out there in December 2017. And I think that, look, it behooves us as the United States to keep the oil price above $80 because below $80, a lot of our production becomes uneconomic. So, and then we become dependent again, and then you see oil really reflect geopolitical events. So, I'm bearish on oil. I'm not like crazy bearish. I'm not looking for $40 oil here unless the world blows up, but certainly, 10% lower, I think is a no-brainer.
Yeah, no, listen, I think 85, well, 85 is an ABC structure on the way down, too. That's the technical. On a fundamental basis, my take is that Europe is in real trouble, man. And Europe's going to slow down.
That's
and Europe,
bearish, man.
folks,
That's bearish.
Europe is not going to need oil because guess what? People aren't going to be moving around. I'm serious. It's sad but true, So
yeah, and listen, King Dollar, man. That's another thing. The dollar, I think we're clear sailing up to around 89.
That's the next spot, And the thing with King Dollar, folks, this is what is really cool about, I love King Dollar, I love the gold business, I love all of this deal, but see, you can get more out of it. I've learned so much about King Dollar being in the gold business, it's insane. Because what you have is that the fear that's sold in the gold business is insane, folks. Fear sells, okay? And, to get the gist of it, factually, there's plenty of people that are in the gold business that say things that are non-factual. And one of the biggest ones, flat out, has to do with the dollar. It has to do with the dollar for quite a while. Did the dollar go to hell in a handbag? Yeah, it did. But guess what? That's over. That's 2008. We already went to hell. We went to hell in the stock market, the dollar. I mean, everything. Every asset class went down. And what that was all about is that it was a monster liquidity event, and you'd sell anything you could sell to get money, meaning the large broker-dealers and everyone who basically was in the market.
Yeah, let me ask you a question, Tom. With today's move in the stocks, how much are we down on the year really here?
If you take a look at the S&P right now, we're only at July 1st.
Right.
Yeah.
Right. So, if this is a real macro event, look, there is a kind of a war going on here. This is a real macro event. This could just be the beginning.
Oh, listen, my take, it is the beginning, but that's been my take for quite a while. So.
Right. No, I understand. Listen, and I've been on board with that take. I agree with you 100%. I think that what we saw last week is there were tremendous investment banking fees made on Alibaba. There were tremendous market fees made on that.
Right.
Juicing that market up to get that thing done profitably and get the other one that was done earlier in the week done profitably.
Citizens, right.
That's done now. This market's clear sailing now. There's very little influence in it, and I think the path of least resistance here is to the downside in equities.
Right, because what happens, folks, is this. Just so if the mantra on Wall Street and large broker-dealers is that buy and hold it forever. Well, guess what, folks, okay? That's not what the broker-dealers do, okay? Because when you get high price, everyone wants to get back in again, and the way to get back in is that, you take your money, which they did in Alibaba, which they did at Citizens, which they have for quite a while, and then guess what? You basically, you don't have to go short, but you pull out of the market. Why? Because you have to do the whole deal all over again. If you actually see on a fundamental basis how many companies actually go bankrupt, come back out to the IPO again, come back in again, that's the game, folks, okay? And it's not done on purpose, but it's done because as Andy just said, where is the path of least resistance, and where can the most amount of money be made? That's all it is, you know. And
right.
So, and you know, we'll find out if we're at that.
And you know, commodities in general will follow. I mean, in the commodities, you know, I look for little diamonds out there. You know,
yes.
I see buying dips in coffee makes sense here. Buying dips in cocoa makes sense here. You know, sugar is really, really cheap, and I kind of like that because sugar rots, and, you know, next year they're not going to grow as much, so I'm probably a scaled-down buyer of sugar here. I like the platinum group metals. If I have to pick a precious metal to buy, it's platinum all day long, scaled down here. You know, so there are areas that I like, and I think that it's like stocks. You know, you get a terrible down move in the market. There are going to be some stocks that are great buys, regardless of the direction of the overall index. You know, that's where you find those little diamonds. I think you have to do the same thing with commodities. You have to look for the strong fundamentals, and you have to stand behind them. I mean, natural gas, I think, because of inventories and because, you know, we are at a relatively low price, I think that's an interesting one, as long as we hold 374. So I'm looking for little diamonds in these markets. The big perception markets, the golds, the oils, these markets, these are to me, are a function of a macro trend that we've seen out there, in my opinion, since the beginning of the summer. That started with grains and you know, and has followed through. So I've been short since then, and it's been working. I continue, and as I just said in the den, Tom, gold closes above 1247.10. I'm out and I'm long, no question.
Oh, listen,
but, you know, right here, I have to stick with what's working.
No, listen, it doesn't matter to me. That's the real bottom line.
No. I'm just explaining. I'm not justifying. I'm kind of explaining my
folks,
kind of thought process.
No, you know what's so funny? If what happens, folks, when you're in the market so long, you know, what happens is that you have to have your own deal. You know, and it's never. I really, and it's sad, I really don't care what anyone thinks.
Because, I agree. I don't either. But, you know, we on the air, it's important that we explain. You know, we could say we're bullish, we're bearish. As you do, as I do, we have to explain why and what our orientation is, and really the reasons our thought process goes that way.
No, I agree.
That's what we're here to share.
And the reason that there's not a caring is that it's a system, and the system is the system. And that's, you know, it's like, let me tell you something. Do you think I wake up every morning, folks, thinking that, oh man, you know, I want the market to go down? No, that's not the way it works. Okay, it's like I can wake up and say, oh my God, I can't believe that. That's just it is what it is, and you know, so.
That's exactly right. That's exactly right. Listen, every day's new, and one thing I always subscribe to, Tom, whatever the last tick is, no matter whether you're talking about gold, you're talking about stocks or bonds or currencies or anything, whatever the last tick is the right price, because that's the price where buyers and sellers are meeting.
Man, there's no doubt about that. That it is what it is, baby. I know.
Exactly. It is. And anyone who tells you the market's wrong, they're wrong.
Well, you know, it's so funny and folks, this is what you do hear, you know, in the press many times. And this is, you hear this, you probably hear from bulls and bears, but it seems to me that you hear it more from bulls. The only time that they say that the market is wrong when it's just going down, when it's going the other way, and it's like, oh, this is so funny, man, because
you know what, you want to hear something funny? You know, I had CNBC on a little earlier when I woke up this morning when the stock started going down. You know, if you listen to the intonation in the host's voices on a day like today compared to a day like yesterday, oh my God, what a difference.
Oh, the best. The best.
It's amazing.
No, listen, the best.
They all sound so depressed today.
Listen, the best was Sue Herrera yesterday, 2 days ago. And what they did, folks, is that they started off saying, oh, yeah, they were doing all the inverse ETFs of direction and pro shares and saying they were up.
It's great to talk to you. It's always great to talk to you.
You too. Stay right there, folks. Andy's going to be coming up after 5 to 6. We're going to be right back.
Bye-bye. Bye-bye.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman wave sequence. Using the Chapman wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. test drive of the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome back, folks. You get the Dow down 222, NASDAQ off 78, S&Ps are off 28, and inside the Dow, I don't believe we have this has been an unusual day because I don't believe we have one green stock inside the Dow Industrials. We don't. The largest mover on the way down is United Healthcare, which is down 178. Then you get JP Morgan off 124, Microsoft's down 94. And the least stock down is Marvell, down 23. So they're all red. That's the bottom line. We take a look at some of the larger movers down here. You get Big Blues off 285 point-wise. 3M's down 207. American Express is off 146. If we go over to American Express and you take a look at American Express, you'll see that it's going after this high volume swing low of 85.75, and right now we're at 87. You take that baby out with volume, and that's going to be an ABC structure on the way down. We go take a look at the Big Blue. Big Blues has been in this consolidation for quite a while. She's going to start running to the end of the consolidation. Not an expansion of volume yet, down 289. It's no big deal. Some of the high flyers out there, if we go over to Tesla, TSLA, we take a look at Tesla. Tesla right now is down 450. She's going to go after one of the swing lows out there of 244.71, and that was 8 million shares. So Tesla's going to need more volume for lower price. The XLE, that little baby is in tough shape. She's building cars to basically get into this 88 area. Right now you're at 90. The XLF, the financials right now, yep, she did it. The financials got an expansion of volume. Right now we're at 23.13. To get inside the lower range for the financials, it's 23.07. If you want to see something that's bizarre, this is like insane. So the lower range starts at 23.07. And 23.07, folks, was where it broke out of from July 3rd. When we came down today, we came down to exactly 23.07. So when you do something like that, it's like, okay, does that mean you're going to break it or not break it? You're coming down with expanded volume. So what happens is that your probability is that as you're into this level, you're building up force to blow it through. That's the way this thing shakes out. Right now, you're at 38 million shares. That was coming into 17 million shares, as well as 20 million shares, 26 million shares. She's coming down with force. Once it gets inside of there, guess what's wide open? It's not even a swing point that we're talking from 22. What is wide open for a test is the low that was generated April 14th at 21.19. We take that, we put that on a weekly basis, and she's screaming. Yeah, she's screaming 21.19 right now. Nothing, that's not the end of the world either. But a small move like that in the financials does end up being a much larger move in the actual individual equities. Yeah, JP Morgan, that's down $1.25 out here. Berkshire Hathaway. So that Berkshire is the largest weighting structure inside the XLF. And that basically has a high. That could be a blow. That's interesting. This is going to be a blow-off high. See, what you have out here is this. This is going to be bizarre if this is how this shakes out, because this is unusual, folks, in the context of a blow-off high. And what a blow-off high specifically is that you double up on volume at the high, blows off out of that area, and that's what we do have thus far on the day that Alibaba went public. And what you'll also have for all the folks that like candlestick charting, you get a beautiful doji up there. So at 2019.26, that was the highest volume days that we've had probably 3 or 4 years. You know, it doubled up. Now, granted, it's option expiration, and just so you can understand what a blow-off does, it is a much harder term to understand because you don't see them a lot also. And so what it is, it's out of the norm. And it has to be out of the norm in a huge way, not in a small way, folks, okay? And in this particular case, when we say out of the norm, if you happen to watch on Tiger TV, you'll see that on the NYSE, you know, we're normally doing 600,000, 700,000 shares. We did 1.8 billion. Okay? That's out of the norm. If you go over and we do the correlation inside the NASDAQ composite, guess what? You normally do 1.7, 1.8. We did 3.1. But that's not it, folks. I went across the world. It was happening across the world. That's what's a total mind blower. It's like, oh, really? How the heck did this happen in Europe and in the United States simultaneously? Guess what? You know how it happened, folks? Because everyone wanted to get in or get out. And on both sides. That's just not buying either, by the way, okay? What tends to happen there is that you have the greed, the euphoria going, and then you have someone else that's letting off on the other side. And that's what a blow-off high is all about. Now, the great thing about a blow-off high, though, is what? Is that you have a higher high, and you have volume, and you go back and test it. Doesn't mean, you know, it can take 2 years, 3 years, 4 years to go back and test it. But, you know, just to keep things clear, that's how that does work. You know, so I've only seen a few of them in the last 25 years. You know, and when they come in, it's like, man, how does this work? Particularly because, you know, I'm into volume so heavily. I remember just, it was like, oh, it's like you have volume, then you don't have volume. But it's at highs, and you can see that people are basically throwing in the towel. That's the bears would have been throwing in the towel. The people that weren't in the market saying, I got to get in the market. And, of course, because the whole world thought it was safe to get into the market, that's kind of how this goes. And we'll find out real shortly. And the reason I'm saying we're going to find out real shortly is this, is that we have swing points out here that have high volume on them, okay? And we start breaking swings with high volume, then see you later. That's the bottom line, you know. Because each and every swing has, as it's gone down, you know, most of the time you've had rejection of lower price, you know. On the weekly basis right here, let me just see this. If I put the Qs on the weekly for a second. So thus far, oh, the Qs are sticking out like a sore thumb. Yeah, okay, so the Qs thus far, we've done, on a weekly basis, we've done 182 million, and you're going into, yeah, you're going into 164. So, and 198. Yeah, so what has happened thus far is this. You're going to have more volume in the Qs in an extraordinary way on the weekly. We have more volume on the daily right now. You look at the S&Ps, and the S&Ps are sticking out like a sore thumb. The S&Ps, there's big volume coming in here. S&Ps on a weekly thus far, we've done 474 million, and you're going into 672. Yeah, so the S&P is also coming down, and you will have expanded volume. Not as much, but you have expanded volume. So the SPY is at 196. That's on its way to 190. And 164 is wide open. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're going to be coming right back. Dow off 291. NASDAQ off 83. S&Ps are off 30. We're going to be right back. Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. This quote is by Andre Gide. Be faithful to that which exists nowhere but in yourself. Market-wise, let's take a look at it out here. We had the Dow Industrials down 264, NASDAQ off 88, S&P's off 30, gold contract up $1.70, rejected lower price, we're at $12.21. Silver down 20 cents at $17.49 a barrel, an ounce rather. Platinum down $5 at $1,313 an ounce. Copper down a penny and a half at $3.03 a pound. Light sweet crude off 30 cents at $92.50 a barrel. Bonds. The bond market is amazing, folks. You get the 10-year up a half a point at 124.24. 30-year up a full point at 137.28. Both running with conviction on the top side. King Dollar up 195 ticks at 85.35. What's going to be interesting about King Dollar, she looks like, well, she gave up somewhat in price. I suspect she's extended. I suspect she's going to be taking a break here. Euro down 37 at 127.43. The yen off 31, trading out at 108.73. Our phone number is 877-927-6648. Give us a call, folks. Well, I know what's going on in your world. In the world of the S&Ps, what do you have? Okay, it took the swing point out that was generated out here on September 15th, took it out with volume. Thus far, we basically are back at where we were on July 1st. We're at 1970. Now, what you have here is this. You're coming into Friday. Well, you have a high volume low at 1904, and it's going to go after it. You're in the lower trading range right now. Dow Industrials. We take a look at the Dow Industrials. Dow Industrials gave it up. Every Dow stock was in the red out here. Dow got back inside the range with a vengeance, by the way. Down 264. What's game on the Dow right now is that 16,330. And the real question is that how fast will this elevator go down? Inside the Dow Industrials out here, the largest mover on the way down was J.P. Morgan. That, point-wise, this is. United Healthcare was next. You had Microsoft next. American Express was next. McDonald's was the least amount, and that was still down 84 cents. NASDAQ Composite. Composite got toasted, got roasted, got all of the above. Composite is at down 88 bucks. We're at 4466, and it's 4485. Once it got back inside that, which it did today, that puts it in the lower range. It's pretty amazing how quick it got back in there, I'm telling you. So, basically 6 hours, we're back to July 3rd. What that sets up, next swing point down there is 43.25. Volume, you had an expansion of volume on the way down. If we take a look at the SPY, you want to see those correlations set up. We did 141 million shares today. That's after making a high with 94 million. You have a high volume low out here at 190. And then you also have a high volume low here at 181. So this baby, folks, is just starting. That's the bottom line. The Russell 2000 has been leading quite a way. It looks like that might take a little break here. It was only down at $1.89 out here today. It does have that swing point low at 107 that it wants to hit, but that selling was tepid in comparison to the rest of the indices out here. When you look at percentage-wise, we had the Dow down 1.5%. The NASDAQ was off almost 2%, 1.9%. So that's a big number. Europe was toasted and roasted also. The DAX was down 1.5. The CAT was down 1.3. The FTSE was down 1. Gold contract. We take a look at gold. What we have with gold is this. Gold contract rejects 1206 today. 1208 was the level. We'll see whether gold can get some juice on the top side. If you look at the GLD and you want to see this correlation, how this correlation is set up, GLD got to 116.70, and these bottoms that have been made out here in the GLD, to me, are really sweet. And what you have specifically is this. So figure gold had gone down for a year and 3 quarters, folks, after its high. The first low that it made was last June. So we're in September now. The first low was made. It was made with the GLD, and that price point that it was made at was 109.86. A weekly volume characteristic on it was 100 million. We go from the 1090 gold, we go all the way up to 1370. That's the first bounce. And you can see, if you look at this correlation, that was going into one of the downdrafts, stopped it right in its tracks. Gold comes down and tests the high volume low, which it should. When it tested the high volume low in December, it tested it with 63 million shares. What does gold do again? Gold goes from 1140 up to 1330 again. What does it do again? Comes down and tests it. And by the way, depending on how long you get the gold report, you know that that's what gold loves to do. This is the third time it's done it in the last 12 years. It comes down, and as it comes down, 2 weeks ago, we came down on 36 million shares. You got to remember something. Your benchmark is 63 million and 69 million. So we come down with 36 million. Last week, we come down with 35 million. This week, thus far, we've done 25 million. So the bottom line, the way we're set up right now, we're going to probably do lighter volume than we did last week, testing the lows that were generated, the last 2 lows that were generated, at 117.39, the highs of the lows. So when you're looking at that, what you're looking at, when you get the highs of the lows, that's what you're looking for them to get over. So They couldn't bust down. Now you're looking to get over it. And that number there, folks, is 120.77. That's the way that baby's set up. Bonds. The bond market, folks. So here, first let's look at the yield. The yield on the bond, we're 2.506. So tomorrow he's going to go under 2.5 again. We go over and we take a look at the bond yield. 10-year goes topside today with 1.3 million contracts, 124.24. That baby wants to go a lot higher. I suspect the first place we're going to see very quickly is 125.21. That's a whole nother point on the way up. The 30-year, same setup. 30-year, huge move on the way up today. 351,000 contracts. We are at 137.28, and that basically is going to start running since 139.11. King dollar. Now, King dollar is the trip, no doubt. And what you have with King dollar is this. It had done exactly what it should have done, meaning A to B equals C to D, hit the swing point, did it with conviction, then tested the high with lighter volume. Then gets to a higher high. It looks like intraday today. You finally had a seller in King dollar, because if you look at intraday, what you had at 10:40 this morning, it was the first time that I seen a sell downtown in the index, and it was a nice one. Yeah, it was 950 rather. That was the first sell. So this is always an indication, you know, bottom line, when I'm in front of the screens, it's a little bit easier bisecting and dissecting this, particularly when I'm turning around, I'm looking for that setup. And at, yeah, that was the second one. I knew it was 1040. So at 1040, that's when the first, so I suspect the first operator came in at 950. Sold down 2,200 contracts, but that wasn't it. Sold down an additional 2,400 contracts to 1040. That, now the juice is downtown. So I suspect we're going to take a break there, and we'll see where this whole baby does shake out. But bottom line, well, when you take a look, oh, Apple, okay? So Apple tomorrow is a big number, folks. Why? What they have with Apple is this, is that the benchmark on Apple is 100.72. You're under that. This will be the first time in 6 weeks that it closed underneath that. After getting over it, that would be saying, can't bust them up, you're going to bust them down. In Apple's case, busting them down, folks, you're talking a long way down. The first spot I'd even consider that it's going to basically even try to stop at is 80. But the bottom line is that you get a gap that's open at 75, and you have a high volume bar at 55. That'd be a 50% move, you know, down. You know, and that's not unusual, by the way, for Apple. You know, what Apple did the last time that it topped out at 100.72 and then moved down to 55. So it had a 45% retracement the last time. Heavy duty, man. Heavy duty. 877-927-6648. You stay right there, folks. We're coming right back. Dow Industrials closed down 264. NASDAQ off 88. S&P's off 30. We're going to be right back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tom takes your phone calls now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We had the Dow finish down 264, Nasdaq off 88, S&P's off 30. Nike just come out with numbers, folks. Nike closed at $79.75. It is trading at it's 84 right now. 83.91. Numbers go like this on Nike. There it is. Okay, so the estimate was 88 cents. They made $109.09. So check this out. Oh, this is interesting. It's always going to be interesting. So it's going to be interesting to see if they're on the right side of this dollar trade. So Nike worldwide future orders ex currency are up 14%. And you're going to have to watch this real closely, folks, on these large multinationals. And I'd have to dig into this more. But bottom line is that I suspect they're selling a lot of sneakers, number one, but I suspect that currency-wise, they're on the right side of that trade. And what that would mean is this. What would happen is this, is that they would be basically converting their earnings, their gross dollars around the world into dollars very quickly. If that's what they were doing, that's where those numbers can get high very dramatically, you know. And if you want to have some fun, you could go through their numbers and see if in fact that's the case. Because if they're on the right side of that dollar, which it looks like they are, they get some action. Now, folks, let's go over to our man, Mr. Basil Chapman at the Chapman Wave. And don't forget, Basil has an outstanding program right here at TFNN every trading day, 11 to 12 Eastern Standard Time. You can get it right on your cell phone. TFNN.mobi. Also can test drive his newsletter. The way you do that, you go to TFNN, you go to newsletters, you go to trading newsletters, you see the opening call right there. Test drive it 30 days, absolutely free. Basil Chapman, what's going on?
Hi, Tom. How are you?
Doing great. You having a good day out there?
Very good, thank you.
So is it getting cold in Boston yet?
It's just cooling down, but I have to tell you, it's been a pretty good month weather-wise.
Sweet.
Yeah, we haven't yet got that real cold. It'll be there, believe me.
Nice. So we're looking at the Dow Industrials?
We're looking at the Dow Industrials, and as you were saying in my opening call, it's a very comprehensive newsletter that goes out every morning. Early in the morning, I start sending charts out to my site, and by 8:35 Eastern Time, the Traders Corner, that's the last one, goes out and has all our positions. What we're looking at, there are about 16, usually 15, 16, 17 bullet points, and I go through a whole bunch of the indices, and some of which we might have, or stocks that we have, long or short, and I change whatever parameters for the stops or the buy stops that we might have. So as far as the Dow is concerned, I got a signal when the Dow went up to I call this an inside track. Anyone's looking at the chart, you'll see that there's a trend line, and then there's a dash trend line, a little red dash trend line underneath it. I call that the inside track, and very often what happens in a price move, especially either in a rising wedge or a falling wedge or a channel, you will get this little inside track, just it's like a silent area that has a propellant or a repellent line, and in this particular case it seemed to me it was a perfect repellent line when the Dow went to 17,350 on the 19th of September, and then dropped and closed at the low and had a very ugly day. That was on the 22nd, on Monday. So we went short in my opening call newsletter, my Traders Corner. I said, let's go short the S&P because that looked like it was weaker than the Dow at the time. And we also put on some short positions of stocks that had, one of them had actually made a new all-time high the day that we went short because of the timing methodology of the Chapman wave, where we look for peak D, E, or F, where we can go to a reversal pattern. Well, what happened was the positions that we had, I increased them this morning, and this is the most short that we've been in a very long time. And one of the reasons is that the rally that we saw going into the high of the 19th, and in the case of one or two, like the IBB made a high yesterday, it just had, technically, I did not have any real confirmation of that. And the weekly charts were still good, but the daily charts said that something was wrong and everything. I'm sure that when you were looking at yesterday's action, didn't you really get that impression that this looked perfectly like a real short squeeze, and later on during the day it looked like there was new buying coming in? It didn't look like there was real strength there, and it was very suspicious to me. They failed to go to new highs, and so this morning I said we will go to the short side. We'll add the Dow to the short side. We've been short the S&P. We are long the volatility index. We're up at almost 20% on the volatility index, but I wanted to add these positions because I always talk about the Dow. I wanted to put my mouth where my talking is. So, I wanted to be there because that's what I focus on the most. So I said if the Dow touches 17,170, we want to buy the 300% short position, the SDOW. So this is actually a very good day for us. Of course, one day doesn't make a trend, but if you're looking at the charts, you see the stochastic is very low. It's at 46%. That's a sign of weakness. And the MACD finally has got the green line, which I call the fast-moving average. It's the 9-period differential, is expanding. And you'll see that high that was made on the 19th, I'm drawing a straight line there. That line to this line here of yesterday's big move up, look how weak the stochastic was, and look, the MACD didn't go to a new high. So we're now in, as I say, one of our most number of short positions that we've had for a very long time. And this is very interesting because if you look at the VIX index, the volatility index had a very sharp spike. It went all the way to 16. What was the high today? I think it was 16.
69.
So yeah, and now what we're looking at is a pull back a little bit. It closed at 1564. But here I'm going to show you something very interesting. Most people won't be looking at this because a lot of people talk about the VIX, but they don't always follow, especially the weekly chart. But you see these cup formations. All of a sudden, we've started to produce a cup formation. So we've gotten really close to the 200-period moving average of 16.93. The previous high was at 17.57 the week of the 1st of August. But you have to go all the way back to April, where it was back in the 17s and 18s. So my suspicion is that the technicals, and you can see the stochastics rising, the MACDs rising. If tomorrow, Friday at 4 o'clock, the volatility index closes anywhere from about maybe 1550, it's at 1564 or higher, that'll be a sign to say, be careful, because the following week there could be the first signs of institutional selling. And I think we've seen some rotation here at the top, and there's been quite the action that I've been looking at is when I see a stock like Marriott, which we happen to be short, Marriott making an all-time high. Look at that vertical move in the monthly chart. It has not had a single month of a lower high bar since, it's hard to believe, since June of 2013. So just on a purely technical level, it's somewhat overbought. But the weekly chart, look at this unbelievable channel that's been going up. And this is leg F, and a possible tomorrow we could have a peak F. That'll be the first time we've had one of these. We had it once before at the week of the 24th.
You can get Basil tomorrow morning, folks, 11 o'clock. Have a great one. Have a safe one, Basil.
Thank you very much, Tom. Have a great evening.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow Industrials finished down 264. You get NASDAQ off 88. S&P's off 29. And if we go overseas, we take a look at the FTSE 100 first. FTSE 100 comes down today, folks, with juice. 66 bucks, 1%. You're at 6,600 right now. And this, I suspect, is going to go after the last swing point, swing low out here, which is on the 8th of August. That number is 65.28, okay, which is about another $110 down. But what you have sticking out here is the 6,500. That is sticking out like a sore thumb. And, you know, if, in fact, you break that, is it the 65? Yeah, it's 65.28. Yeah, the 65.28 is sticking out like a sore thumb. You break the 65.28, you're going to be down to 6,000. 6,000 would bring you back to June of 2013. The amazing part, you know, it looks like we have a top end, but the FTSE itself has a much, much larger top end. And this is what ends up happening with larger tops, okay, is that when you have a top, like the FTSE has a top that has been hanging out here since April of 2013. When you have one that's that long, the fall is much larger. The reason being, folks, is that at that whole top, that's distribution the whole way. So it's going to be intriguing to see how this actually plays out. And the FTSE is going to be a good signal watching how this plays out. Why? Because these are all one markets, folks. It's the same market. You know, they're correlated, and they're very highly correlated between Europe and the U.S. So that's good old the UK. We go take a look at the DAX. DAX come down hard, 151 bucks. Now, the DAX hadn't made it to its high, and the intriguing thing about the DAX is that the DAX does have all lower lows. You know, the February 5th benchmark, that had got busted. It's got busted twice thus far in the DAX with volume. It had busted. So the number characteristic we're talking about is 9071. That was February 5th. And our benchmark is that's 1727 on the S&P, February 5th. It had busted it when it came down in March. It went to 8,900, and then it busted it when it came down in August, and it went down to 8,000. No, 8,900, sorry, 8,903. So that setup there is pretty dramatic, because if, in fact, you break that, then you have the argument to be made that this has been topping out since November of 2012. So thus far, so watch how this shakes out. Thus far, the DAX is at where it was trading in November of 2013. You know, if we go to the FTSE, this gets even more bizarre with the FTSE. This is a trip, okay? So if we take the FTSE and we put this, what you're going to see is that the FTSE right now is trading, no, it's not that bad, May of 2013. That's how the FTSE's trading out here. So, Hang Seng, let's go over to Asia. Asia's going to be opening up, another couple hours. Asia was down, Hang Seng was down 153 last night. That little baby also is going to be pushing tonight into its lower range. The lower range in the Hang Seng is under 23,576. Right now at 23,768. We're down at 150 last night. You know, we'll see how it gets into that level. That's where it wants to gun. You get into that level, you're going to go a lot lower. Nikkei last night was up 206 points, and the juice in the Nikkei, and this correlation is just opposite, has to do with, you go JPY, these currency correlations are so cool. The yen is at 108. So the weaker the yen gets, just so you can wrap your head around this for a second, the weaker the yen gets, the more powerful that the Nikkei can get. Why? Because they will be exporting goods at very inexpensive prices. That's how that whole baby sets up. We take a look at let's go over to Google and see what we have with Google. So Google today couldn't make the top, down $13. That's not the end of the world. We're at 585, and what you have there is at 567 is game. Amazon. Now, Amazon, folks, can get a lot lower. You know, Amazon had gapped down, and the last time that it gapped down, and the key with Amazon is to really keep your eye on it, because Amazon was the first equity off the lows in 2007. And, even though we were coming down in 2008, that bottomed 6 months before everything else bottomed. And it's real possible that it looks like Amazon actually topped 6 to 8 months prior to the market topping. The top in Amazon is January of this year. And then what ended up happening is that you have Amazon that has high volume off the high. That's always dangerous, folks. And we'll be able to see just what kind of downdraft we have with Amazon as it attacks the 288 area. You break the 288 area on a monthly basis with more than 138 million shares, guess what? You have a monster ABC down. 405 is your A, and 284 is your B. So you're talking about what? That's $1.20. Your C is 360. You get, what's that, 240. 240. It seems hard to believe, right? But bottom line is that that's how that A to B equals C to D lines up. Biotech's hitting the NASDAQ good. Apple's the big number. If Apple can't handle this at higher price, it's going to be trouble. Apple looks like it's in trouble. Technically, fundamentally, Apple is definitely in trouble. I mean, they didn't move quick enough on the aspect of their software update, and now they're having problems, a PR problem more than anything, about their bendable phones. Apple defended itself against complaints about the malleability of its new phones, saying that any bending of the device is extremely rare and that the smartphones are constructed to the highest of standards. The bottom line, folks, is that it looks like no matter what the phone actually is, meaning it can be a great phone, well, guess what? they better do something on a perceptual basis really quick, because what has happened is that if you haven't seen the bendable deal yet, just go on YouTube. And when you go on YouTube and see that bendable phone, what you're also going to see is that there's already been 25 million views. So you know how Apple folks are. I mean, that's a cult, folks. And that can be a slight problem if people aren't going to go out there and upgrade ASAP. You know, I'm sure they'll get it fixed, but that in itself is a problem. Nike came out with earnings after the close. Nike is hitting new highs. Nike closed at $79.75. We're at $84.21. And if we go take a look at this, we just put this on a weekly basis. What you're going to see is that Nike's been consolidating out here. You close, if she closes over, yeah, she only has to close over 82.29, and we'll see what they get the juice inside it. But you close over that, and Nike's got some action. That's on the weekly. We put this on a monthly basis. Oh, look at this. On a monthly basis, she's a small ABC up. Interesting. So the A point on this was 45, the B 66, $20. You see 59, well, that's $80. So it really, what Nike just did here is this. I wouldn't bite into this. This is why. Nike just finished one ABC up. The price point is 80. It'll probably be a spike high. That's what I suspect we're going to have with Nike. Because if you have a bad market, okay, the bottom line, folks, they throw the good babies out with the bad babies. You know, there'll be stocks that are stronger. There's no doubt about that. But when they're liquidating, guess what? You liquidate everything. Well, you liquidate the things that are up and that you can get rid of ASAP. That's what it comes down to. We go over and take a look at the TLT, the 20-plus year ETF. You'll see that moved a buck 36 today. Had a little juice behind it. We're at 116. That, the first time we'll get any type of resistance is up there at about 116.88, and right now we're 116.17. This bond market, yes, bizarre, no doubt. If you're looking for a mortgage, folks, go get it, because you're at 2.5 right now in the 10-year. That'll sneak below 2.5 tomorrow, probably go to 2.4 something, and that's going to put your 30-year mortgage at about 3.9 to 3.85. You know, my take is that the rates are going to go lower, but I would take that rate in a heartbeat, okay? You know, because you got to remember something. On every, let's see, every couple $100,000, you know, every, let's see, 0.3, every 2 to 0.3% is about $50 to $60 a month. You know, so it's a big number. And what you want to do, particularly if you're listening to the markets all the time, you can line up that bond. You know, you line up that bond, you know, inside the marketplace and get yourself a decent either refinance, or if you're looking for a hard asset out there. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're coming right back. Dow finished down 264. NASDAQ off 88. Some of the Dow stocks, you had Big Blue down 330. 3M was off 240. DuPont down a buck. Oxy down 164. We're going to be right back.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Join Andy Hecht as he shows you how to make money in commodities. The Commodities Hour, next on TFNN.
Tom O'Brien.
Welcome back, folks. Let's go over to Micron Tech. Micron just come out with numbers. So Micron closed at 31.70. It's trading at 32.90. It's up $1. Numbers on Micron go like this. Fourth quarter revenue is up 6%. The revenue is $4.23 billion. Their estimate was 81 cents. So they're going to see 82. Gross revenues estimate was 4.16. They did 4.23. So Micron up $1. She is going to go. She's not going to go after a high swing because the high swing is $35, 34.70 to be exact. Yeah, she'll go after 33.60. She can go after. I wouldn't be biting on that either. PRGS. We take a look at PRGS. This is Progress Software. That closed at 23. The high for the year is 26. The low is 20. This just come out with numbers also. This is trading up $1.80. We're at 24.89. Numbers go like this in Progress. Their revenue is $79 million. They see fourth quarter revenue coming in at 96 to 100 million, which is nice. Earnings per share, they're seeing at 39 cents versus 33. So that little baby is also getting a pop. And, oh, that's interesting. So this one here, folks, must have come in with good earnings in June also. It had gapped away from $21, goes up to $24.88, and guess what? You have a high volume high up there at the $24.88. GPRO. This is GoPro. GoPro, after the closeout here, is down $1.15. I don't think there's any news on it. I think it's just down. And don't be shotting this just yet. This is going to be a nice shot, but don't do it just yet. Because what you have, folks, is this. GoPro has a 41% short position. So check this out. I've been watching this every day. Yesterday was only a 30% short position. They're just laying into this, and unfortunately, they're getting smoked on a continual basis. The setup is almost there. It's just not quite yet because you need the extension that is like dramatic. And when I mean dramatic, I'm talking about dramatic, not like this. Okay, so let me just, the most conservative way, 52, that's $20. That would give you, oh yeah, it's not even close. So you wouldn't even think of it until like almost 90. The reason being is that A to B equals C to D is 84. So you want an extension on that 84. Isn't that bizarre? But you can see what happens. In the course of one day, we just went from a 30% to a GP, to a 41% short position. And the way, once it gets up to those levels, to do it more than likely would be in the option market. But what's going on right now in the option market, they're getting a 10% premium. 10%. If you want to hear something really wild, Alibaba, if you want to go short Alibaba, you know what it's going to cost you for the shares, folks? 7%. You know, the shares are, you know, you can basically lend the shares right now, but 7%. 7% is insane. GoPro is the same thing. If you know, so that's something to, you know. So the option market, premium's 10. You lend the shares, and you know what happens with that is that that's a big business. I've never basically got them that high. That's really high. That's the bottom line. But guess what? If you're right on the deal, it's not the end of the world. But that is a huge premium because you're going to make that premium up, and yeah, we'll see where that shakes out. It's a big premium. We take a look at the Amazon. Well, the Dow stocks right now, folks, are the ones that you really want to keep your eye on. The reason being is that you only get 30 stocks. They push the Dow in an incredible way topside. The dollar, okay, in itself, okay, is going to basically do some heavy destruction inside a lot of those Dow stocks. It looks like Nike got it right, meaning on the dollar. And that's probably the conversion of the dollar. You know, Nike does business all over the world. They come in with big numbers, you know, blew away their numbers, actually. The estimate was 88 cents. They come in with $1.09. And Nike always has this, by the way. They always talk about X currency. But when I look at that in the movement of the dollar, there's a lot of different ways that you can either hedge, trade, or not trade the dollar. The cleanest way is that whatever places you're doing business in, if in fact you need that money, keep it in that deal and make sure you know what business you're in. You know, and what Nike just may, you know, I'm sure they sold a lot of sneakers. What they may have done also, though, is just if they keep everything in U.S. numbers, great, they keep it in U.S. numbers. If that's the case, you're going to see those numbers go up quite a while because this dollar, I suspect, wants to take a rest, but guess what? It wants to go higher. You stay right there, folks, because our man, Mr. Andy Heck's going to be coming up with you next. He's going to be growling a problem with you. And don't forget, at TFNN, We do 10 hours of live programming every trading day. You can get it right on your cell phone, folks. Great audio. Just go to tfnn.mobi, tfnn.mobi. If you want to get Tiger TV with all the charts, go to tfnn.com, hit that TV in the right-hand corner. You're going to get the charts, video, audio, all of the above. Tonight, of course, over in Asia, I suspect you're going to get some selling pressure here. Because this is a big number. These were small numbers, folks. The Dow was down 1.5%, and they had the S&P's off 1.6, and the Nasdaq was down 1.9. That's going to vibrate real quickly into Asia, particularly because the Taiwan market. Because what you do have, well, Taiwan might get saved because of Micron. So Taiwan's got a lot of semiconductors in it also. But what you do have is that it was the tech space that started the downdraft in a big way. Your large multinationals followed it up, and the dollar itself is the number, that fast move. And what I expect, the bottom line is I expect the dollar to pull back and basically the metals to go higher. Gold is in much better shape than silver right now, because it didn't break out the lows like silver did. Gold still has to prove itself. And coming into a Friday, guess what? It's going to have the shot to prove itself. Don't forget, tomorrow morning, folks, Darryl Mott and myself, we do a Nadex program. We get John Logan kicking us off at 8 o'clock in the morning. And then Darryl and I do that Nadex program at 10. And to get tuned up, folks, I hope everyone signed up for the $10,000 cash giveaway. That is going to start Sunday night, but Monday through Friday. So we get tuned up for that, baby. We get the volatility in spades, and we're going to have a good time, and someone's going to make a lot of money out there. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Whatever you want in life, folks, visualize it like a nice big motion picture. Step into it. Take ownership of it. Fly with it. Thanks for being here, folks. Have a great night, safe night. Look forward to it. Well, hey, stay right there. Our man Andy's coming right up. That's a beautiful thing. He's growling, baby. Have a great one, folks.